We're very pleased with the strong set of results. In terms of our strategy, we've always said that, from a marketing perspective, we obviously have the flexibility to be able to operate in the different markets. So our reliance on China, yes, is lower than it was a few years ago, down to about 56%. But again, it's because of our size. Our size allows us to be able to have the flexibility to play in the markets where we can get maximum value for our high quality products.
So it has nothing to do with China's shift from an industrialized country to more of a...
Not at all. I mean, China remains a significant player in the steel industry. It remains a very, very important customer base for us. And the great thing about China is that from a demand for high-grade ores, which are lumpier in nature, which is the niche that we play in, it also still offers us great opportunities going into the future.
Now, moving back home, in South Africa, you have the Kolomela project, and you've just gotten a license to expand the mine, is that correct?
Yeah, so as part of our life of mine extension, as you know, there are essentially, 4 key pillars that drive what we do. One being, being a fatality-free business. The second one being margin enhancement. Life of mine extension is obviously important, and being an employer of choice. So the Hunin Kranz prospecting right being incorporated into Kolomela is part and parcel of our ambitions around extending the life of our mines to 20 years.
What does that mean for your bottom line? What sort of returns are you hoping to see from this?
Well, if you look at our intended aspirations, we want to improve our margins by $10 per ton. So from a margin curve and a competitiveness perspective, that puts us on the right side of the margin curve.
How far away are you from meeting this
We've
target?
got our work cut out. Clearly, we've targeted $10 per ton. 2018, we probably achieved $3 per ton of that. Our work, is still cut out, but we're looking forward to the journey.
You mentioned that as well as part of your drive going forward is to align with President Ramaphosa's goal of job creation.
Yeah.
Tell us what you guys have done so far.
I mean, shared value is a concept that we ascribe to. I mean, if you look at what we are doing in terms of our social investment, but even more than that, in terms of procurement, in terms of our spend, in terms of BE companies, about 11.8 billion rand, of which 1.4 billion is through to local host community companies. And of that has created 2,700 jobs. And that's very much in line with our aspiration that for every 1 permanent job by 2025, we want to have created 3 permanent jobs outside. So that 2,700 jobs being created talks to about 16,000 income opportunities for people. Our drive towards women in mining, the youth, our investment in terms of education, it's very much in line with the 10-point plan that the president has set as a challenge to the mining industry. And we're very pleased that we're able to play our part in that.
Now, you mentioned that electricity doesn't play a very big role in the kind of mining you do. You are more reliant on diesel.
Yes.
What happens if the price of diesel fluctuates this year?
Well, clearly it has an impact on our costs. And again, coming back to our strategy, margin enhancement is all about improving productivity, improving our costs in terms of buying better, spending better, but also it's very much around maximizing, the benefit from our high quality product range. So clearly we've got to manage that as an ongoing cost line.
Shareholders must be very happy with your dividend announcement today. You just introduced a new dividend policy. Could you take us through the thinking behind that?
Well, the dividend policy is not new. It's always been around since about the second half of last year. And it's very much a policy that gives certainty to shareholders to say that of our capital allocation, we are targeting 50 to 75%, dividend payout ratio. Now, obviously, that takes into account the fact that, we have to manage the risks in the markets and the volatility, and it also takes into account the fact that we need to be investing back into the business. So it's a balance that we have to. We're very pleased that if you look at it from the second half perspective, it's a 75% payout. If you look at it over the year, it's a 100% payout, because there was a top up that was made in the first half of 2018.